Okay legends, welcome back to the channel and thank you for tuning in. The weekly candle has just closed for Bitcoin and the total cryptocurrency market cap closing above the $3.73 trillion level and confirming the break of the weekly RSI. This is a very good sign for the cryptocurrency market as it suggests that demand has been able to sustain at these current prices, with Bitcoin pushing back up from the lows at 115,000, coming close to retest yet again 120,000 just before interest rates. We are in for a very interesting week. A break of this $120,000 region will result in a strong move likely to a brand new all-time high, pushing both the total cryptocurrency market, Bitcoin, and the altcoin market cap up. In today's video, we are going to be discussing the short-term consolidation, our projections and targets, the key levels that you should be watching, the best and worst case scenarios, the current fractal spanning back to the 4-hour consolidation, and of course, the weekly charts and the altcoin market. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin by clicking this name, check out a 53+ month trading track record, or watching a 10-minute video showing you inside the channel. Go ahead and check it out. Let's jump into the content. So as we can see, guys, a very good weekly close for the total cryptocurrency market cap here, sustaining above that $3.73 trillion level. Within the last 7 days, we're even able to come back down to retest that level, flipping it into a point of support. Now, with interest rates just around the corner and current probabilities sitting at 95.9% in favor of a pause, there is a degree of uncertainty moving into the upcoming week. But with this uncertainty, there is also a degree of optimism, as of course, the overall expectations is still in line with reductions in interest rates moving forward. And with Bitcoin consolidating within a horizontal consolidation, similar to what we saw in our 4-hourly consolidation back between the months of May to July, the overall expectation is still going to be continuations into new highs, provided we break through this structure. We'll come back and discuss all of this in the video today. Starting on the market data, 24-hour volume and liquidations both pushing up a little bit as we come out of the weekend, with 24-hour volume up 24% at 235 billion. Liquidations up 64% at just over 200 million, with around 3/4 of those liquidations coming from short positions. Again, we're looking at the 24-hour breakdown. A lot of liquidations still coming from Ethereum, as Ethereum does still have a lot of volatility on the short term. Moving over to the DXY, some short-term pullbacks here on the DXY moving into interest rates. Again, not expecting that much movement for the DXY over the next 2 days. Again, we are expecting a bit of volatility for the DXY moving into interest rates, and particularly during interest rate decisions. The overall expectation is still going to be a macro correction into that 92 to 93 region. Again, how that plays out, how quickly that plays out, whether or not it plays out, will be very much dependent on what those interest rate decisions actually result in being. Moving over to the S&P 500, still looking fantastic, pushing up to 6,450 again, yet again, a brand new high here. We are watching that 6,500 level as a potential psychological point of resistance, keeping our eyes very peeled on that region. We are still playing this by a level basis, an invalidation basis, meaning the trend is your friend until it ends, and only when we start to see breakdowns of prior highs are we going to be watching for corrections. That means while we remain above 6,300, we are still going to be expecting continuations upwards. If we drop below 6,300, we will then start to be looking for corrections back to these weekly highs at around 6,150. So until then, bullish above 6,300, looking for a target of around 6,500, and we're getting very, very close to that target now. So all in all, looking very healthy. Again, depending on how interest rates go, can cause a little bit of volatility in the S&P 500 and of course for the cryptocurrency market. Let's go ahead, guys, and jump into the crux of today's analysis. Like we said, the total cryptocurrency market cap, we're looking at this on the weekly. We're taking a look at, of course, the altcoin market cap as we are coming back to retest that $1.6 trillion level. We'll also look at Bitcoin dominance, as Bitcoin dominance is doing what we were ideally looking for, which was a rejection on the weekly from that change of character, but we are still holding above the 50 EMA, which we'll discuss. And of course, we'll be discussing the short-term consolidation, Bitcoin short-term and macro targets. Before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BingX at the exchange links down below. You've got a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making the content, and of course, guys, you'll support yourself trading on exchanges I use and I trust. Check it out. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get into it. Now, I want to start on Bitcoin's price action today on the short term, going then over to the weekly and the macro, and then wrapping it up on Bitcoin dominance, on the altcoin market, and the total cryptocurrency market cap. So we'll jump between timeframes here and jump between charts, but starting on Bitcoin. Now, as we discussed, I think it was 9 days ago now, we talked about the potential for macro tops for Bitcoin being at around 131 to 137 to 144,000. Now, this was based on our projections utilizing 3 different points of data. Number one, the uptrending diagonal resistance represented by, again, our prior highs from March 2024, December 2024, and we're just taking this trend and dragging it across. Number two, we're looking at the uptrend represented by our recent higher lows and lows. We're looking at, again, April 2025, 74,000. We're looking again, 99,000, the 23rd of January, I believe, June 2025, sorry. Again, dragging that trend line across. This provides us a upper range high and range low resistance and support based on the trajectory of the trend. Then what we did was we overlaid the vertical dates, that being the first week of August and the 6th of October, as key dates of interest. Now, these dates relate to potential top dates based on the 4-year cycle, right? The 4-year cycle suggests a top at October 6, 2025. This is based on the 1064 bar day theory. This is, okay, the traditional expectation. This is the most common expected top date based on the 4-year cycle, and you would consider this to be the traditional 4-year cycle top date. The second one we are looking at is going to be the first week of August. Now, the first week of August is a less commonly referred to top date for the 4-year cycle, but nevertheless, it is still a point of interest, because what it does is it takes the length of each cycle and it goes ahead and applies the diminishing nature of the cycles, which was diminishing by around 2 months each phase, and it goes ahead and extrapolates that into this cycle, which would mean we would have a 26 bar cycle, which would give us a top in the first week of August. Now, it's very important to note, this is not supposed to be a form of predictive analysis. Cycle trading is not predictive in nature. It by nature is descriptive and diagnostic. Okay, so we cannot utilize this in any form of actionable way when trading. The subjectivity to cycle trading is too great. There is not enough actionable data we can derive from this. The only actionable data we can derive from this is post tense, or should I say past tense. It is after the fact it has occurred, and therefore is too prone to subjectivity and changes. It is a way we've utilized we'll rephrase that. Cycle trading is a means to explain what is and what has happened. Humans love to find patterns, we love to find and explain things, and it is just a theory of use to explain what the price is doing and how, if it continues in a similar fashion, how it would develop moving into the future. It is not the driver of price action. The driver of price action is buyers and sellers. Buyers and sellers determine what they do based on emotion, based on economic news, based on just pure gambling, based on a variety of actual external mechanisms that move the financial markets. Cycles and 4-year cycles and all different types of cycles are simply theories that we use to try justify and explain how and what is happening to the market. So we're not using the 4-year cycle as a set in stone, the top is going to be here. It is what it is to do. It is to give us key dates where we could see reactionary price action occur. We have to be paying attention to these key dates, because if we see any sort of reactionary price action occur, maybe we could apply a little bit more significance. Now, with the 4-year cycle being now going on for a very long time, for at least for what you see on the Bitcoin chart, since 2014 essentially, it is normal to see reactionary price action on these dates. The more people expect these dates to be reactionary, the likely we are going to see a lot of reactionary price action on these dates. So those are our top dates based on a 4-year cycle. These are not my predictions. I do not think the price will top here. In fact, I don't know when the price will top. We have to watch how the economic news develops and how the market reacts to these levels. All we can do is project what the price would likely be on these particular dates using the current trends we can see. We are taking an objective approach, trading level by level. The trend is your friend until it ends. We'll talk about when we would turn bearish and what that would look like later in today's video, but for now it is still looking very good. So provided that we see continuations into these dates, the logical top dates would be 131,000, 137,000, 144,000. These are logical potential top dates for Bitcoin. If we're looking at the short-term price action now, and we'll come back to the short-term in a second. If we're looking at the macro price action, for us to have these continuations upwards, we need to see a positive momentum shift here on the RSI. What does that mean? Well, this downtrend on the RSI representing these prior tops needs to break upward. That would signify a positive momentum shift and would signify the buyers are ready to push the price into the next leg on the macro. Let's jump over to the short term. The short term price action is what going to be determining this entire move. Now, already when we're zooming out, if you're watching the chart here, you're probably seeing a bit of a fractal before your eyes. You're probably seeing a little bit of a similarity between this cluster of price action here and this cluster of price action. You're seeing, wow, this looks very similar. And the reality is, yeah, it does look very similar. We're seeing a degree of a fractal plane. Now, fractals, again, are simply just periods of time where we will see very similar price action develop, and these price actions, this price action develops generally within ranges or structures. And what we're seeing here is we're seeing a horizontal consolidation. We had an overextension on the top side, followed by a deviation to the low side, below sell side liquidity on both instances, sell side liquidity, followed by a continuation back into the range high, and eventually a breakout. So if we were to follow the same pattern of which we followed here, we would see the Bitcoin price action break toward the upside. And in fact, even if we ignore this entire structure and we simply look at the current price action, the current price action is in a horizontal consolidation. And horizontal consolidations, when we enter from the bottom side up, are generally more likely to break toward the upside. So even ignoring the fact that this is a fractal, this is looking very good. We saw a correction into sell side liquidity, okay? We retested and deviated. We trapped potentially some late shorts down here, and we have pushed back into the range high. This is a good sign that this is a local bottom and was showing a lot of strength for reversal. What do we expect? We expect if we break through this $120,000 region, this level of resistance, we will see the next leg up for Bitcoin. Where could that take us? Well, we take the measured move, the range high to range low, apply it to the expected breakout point. That would take us to 125,000, okay, which would essentially push us into a brand new all-time high for Bitcoin. This is a realistic expectation for Bitcoin, provided our range low is able to sustain. So that 125,000 target, that 130, 137, 144, all those targets are only possible if Bitcoin sees this $120,000 break, but most importantly, we need to remain above that 115K level. If we drop below 115, we break down this high time frame consolidation, well, this short-term consolidation, sorry. And if we see the breakdown of the short-term consolidation, we see an equal move downward. Where would the equal move take us? It takes us right back in. Look at this, right back in to that prior 4-hourly horizontal resistance at 110. And the consequences of that move on the higher time frame, but also on the total cryptocurrency market cap, is that we see the altcoin market cap correct, and we see the total cryptocurrency market cap confirmed deviation, see correction. So it is of absolute importance that Bitcoin does not drop below 115 again. Okay, we sustain above, and while we do, the probabilities in our eyes are pointing upward. It is looking good. That is it for the short term. And let's jump into the rest of the markets. So moving over to Bitcoin dominance, and Bitcoin dominance is really looking bearish over here. And this is a really good sign for the altcoin market. Now, the altcoin market saw a little bit of turbulence last week. And, you know, that is kind of expected. Any time we see any sort of uncertainty, speculation, news events upcoming, we generally see the speculative assets sell off first, and we see rotations occur back to Bitcoin. Now, here is the thing. While we saw this occur, the total cryptocurrency market cap was able to sustain above support. That leads us to infer that this was simply a healthy pullback and profit taking was occurring. This was not bearish, this was healthy. What we have seen for the Bitcoin dominance chart is we saw, and we can confirm it was healthy, because Bitcoin dominance went upwards, but it had not closed above the change of character. It actually closed under the change of character at the 50 EMA. This is a good sign. This is a good sign. So it means even during the week, we saw speculation, we saw rotations back to Bitcoin, but by the end of the week, we saw those rotations back to altcoins again, which is a sign the altcoin market is still a lot of demand for altcoins here, which is a great sign as the total cryptocurrency market cap pulls upwards. So we see Bitcoin dominance continued below the 50 EMA. It is very plausible we could see corrections 57% for Bitcoin dominance. And that would be a significant rally for altcoins, potentially pushing into the $1.16 trillion level, and we will likely see altcoins have another leg up similar to what we saw here. And again, the altcoin market is not what it used to be. It is not what it used to be in 2020, 2017, and before. We're not just going to see altcoins go up indefinitely. We will see pullbacks. We will see periods of uncertainty, and that is completely normal, guys. There are thousands and thousands and thousands of altcoins this cycle in comparison to the prior cycles. There are just simply way more places people can park their money to trade or to invest in comparison to the cycle. So you're not going to see the entire altcoin market cap go up 800%, right? Every coin just go up like 800% in a week. It's not going to happen. Maybe you might get one or two, but the reality is the total altcoin market cap is not a projection of how your individual coins are going. It's the overall projection of how the altcoin market cap is going. If the total altcoin market cap is going up, it is more likely than not the average altcoin will be performing exceptionally well, or at least okay against Bitcoin in comparison when it's going down. So if you want to see altcoins do well, this needs to continue upwards into this range, and we need to, of course, sustain above the $1 trillion psychological support, this higher low, to do that. So to summarize the charts right here, hold above 1 trillion. This is a higher low. We continue upwards. Lose 1 trillion. We are going back down to the baseline of the Ichimoku cloud, 960 billion, or potentially a 50 EMA, 940 billion. So keep your eyes on that. The total cryptocurrency market cap, it is a very simple analysis. It is super simple, guys. Provided we remain above 373 trillion, we will remain upward. That is it. It is simple as that. If we drop below 3.73 trillion, what is this? It is deviation from the range. We see a pullback. Will the pullback be massive? It could be. It could be, right? If we see that happen, that a 4-year cycle top becomes a reality and it actually happens, it could be a big pullback. But from our targets, from our technical levels here, the logical place to pull back to be about that break of structure level, which is around about 3.5 trillion if we do see a pullback under 3.73. So still a considerable correction for Bitcoin and altcoins will occur around, 5% maybe, for altcoins maybe 10, 15%, maybe 20% if we see that occur, but nothing potentially, macro trend breaking if we see that happen. So that is what we're watching, guys. Bitcoin is looking good, looking ready for that next move upwards, just needs to break 120. And of course, that is going to be the overall expectation provided 115 holds. We're moving over to a daily chart. Again, this horizontal consolidation is a great sign. We're seeing the RSI drop down on a daily. We're seeing these higher lows on the daily closes. Again, a degree of absorption occurring, meaning there's still demand up over here at 120,000. Absolutely insane stuff. So we'll watch how this price action develops over the coming week. Of course, we do have interest rates may throw a spanner in the works. Jerome Powell wants to come out and talk a whole lot of nonsense. We could see the market see a lot of volatility, but it is more common, based on what he has said in the past, that he comes out and just says basically a whole lot of nothing and a bit of uncertainty, and we just see the market chop a little bit and then just grind in its current direction. So that is what we're expecting. Thank you for tuning in. Have a fantastic rest of your day, and I look forward to seeing you all in tomorrow's analysis. See you then. Bye.